Was it reasonable for investors to think that there was a chance Lyft was going to match Uber in moving up its profitability forecast?
I think there was certainly expectations around them moving it forward by at least a couple of quarters, if not the whole year. And what the guidance suggests is the company doesn't feel very comfortable about the top line. So you see a meaningful deceleration in top line growth. They grew 60% last year. Now they're guiding to 27 to 29%. And when you start to see deceleration in top line growth, it's very hard to cut further costs.
Right.
And so they've been cutting down on sales and marketing. They've been limiting their geographic expansion. And the insurance costs aren't going down because at the end of the day, there are regulatory requirements and you can't do without insurance. So I think Lyft has a tougher road ahead when it comes to achieving profitability. And I doubt they're going to push it forward.
So Scarlett mentioned this acquisition of FlexDrive, a small deal, but it raises the question here too that Uber did try to sort of diversify, I guess, if you will, to a certain extent by moving into, food delivery and other services. Lyft kind of had a strategy that seemed to actually move away from that, or at least not embrace it. Do you think they need to be a little bit more diversified?
Absolutely. If you're an internet company, you need a bundle. You need.
Are they an internet company, or are they just a taxi company?
They are a marketplace. So at the end of the day, they don't. I mean, at least for now, AB5 isn't into effect. Those drivers aren't really employees. And at the end of the day, you're going to sell, a bundle. So they have 20 million plus active users. How are you going to boost the monetization of those active users? You're going to offer them more services. So ride sharing. The max you can expect from a user is probably 4 to 5 rides a quarter. Beyond that, it's going to get saturated unless you're going to add food delivery or grocery delivery or some other ancillary services.
So what then is the ideal combination for Lyft?
Well, one way is they could do something similar to what Uber has done, expand into food delivery. Although I would argue food delivery's margins are even worse than ride sharing. So that becomes harder.
Is DoorDash the answer for Lyft?
Well, so again, they can form partnerships, they can do exclusive deals, but at the end of the day, just focusing on ride sharing in North America isn't enough because you're catering to 200 million adult users, and they aren't going to suddenly, start taking double the number of rides than they were taking, last year. So the addressable market will saturate for Lyft.